Hello, good morning, ladies and gentlemen, and welcome back. It is a video that I've been I think delaying. The last video that I've published in TradingView on the crypto market was I think back in mid-November or just before, just after, but like that was around that when we started having like this move back down on these big red candles on the crypto market, on the Ethereum and etc. So I felt like I think I would invite everyone to just go back to this last video that I produced. Again, try to basically watch it, accelerate it in speed, and it's only 20 minutes, but it's very informative to go back. And honestly, it helps me a lot as an active investor, as a trader, to go back to my notes, go back to my snapshots on every single trade, go back to even the videos that I produce, go back to uh, all the things that basically give me a track record, and be able to backtrack, analyze what I said, what I could have done better or not, etc. So if you have, just say 10 minutes to uh, to waste, then go back to this video, and you'll understand what was the logic behind my sort of like negative bias, or um, feeling about the overall state of crypto market. And what I would say is basically since November, I back in November, we had like several signs, that we saw in the market. A lot of institutionals, especially on the firm, taking out big positions off the market. The overall technicals that I really basically didn't like anymore, and it pushed me to really minimize my crypto exposure to almost nothing, really almost nothing. And I became that sort of like long-term, I mean, it's like medium-term, long-term investor, in my mind, where I'm going to be looking at longer time frames in order to establish major areas of support in price, major areas that are, usually a confluence of factors taking into account, Duncan channels, EMAs, or horizontal price areas, volume at price, etc., etc. Again, I'm not going to basically go through my overall trading, technique and stuff like that. It's not the point here. But the point is that you, when the market turns like that, I start basically becoming a lot pickier in the way that I'm going to be getting back in the market. And honestly, this market, I've been opportunistic. As much as like in certain markets, you can have like a longer term view and perspective of things. I think the way that I trade has been even more helpful with cryptos, just simply because this market is a total cycle. I mean, the way that it trades, it's just unbelievable. When you see the big performers of 2021, like the Solanas and the likes, making 100, 200 times your money in a space of less than a year, it's just amazing in terms of opportunities and wealth being created. But at the same time, I believe that it has played negatively in the sense that people, investors, and traders have become quite complacent with the idea that crypto has to make make money for you immediately, and in the turn of like an instant. You put your money, and in 2 3 days, 5 weeks, or 6 months, you're gonna quadruple, you know 10 times or whatever it is, that your money. The fact is that, historically speaking, if you look at all sorts of asset class and financial instruments, this is not the case. I mean, you've got, yes, the odd big winners in the stock market and this and that, where you're going to make a lot of money, all the time. But this doesn't go without in a straight line, like almost anything else. And therefore, crypto is not immune to that. But the problem is that people going very complacent with the fact that they're going to make money a lot easier and a lot quicker than any other market. It might be so, it might be true. But this sort of complacency has brought a lot of people putting a lot more money and not basically being careful about their risk management, putting a lot more money in terms of percentage of their overall equity, of being too leveraged on their position, etc., etc. And that creates a problem because in my career, the biggest problem that I've seen with traders or investors is leverage and a sense of risk management not being followed very carefully. If you ask me, I would say that a player that wants to look at a long-term perspective on crypto as an asset class, part of their portfolio of financial assets, should not really have a lot more than five to 5 to 10% max out of their basically liquidity, portfolios, and that's what that's what I reckon. Obviously, depending on your age and your different, several personal circumstances, married, not married, kids, having all these things will play. But as a sort of rule, even for someone who's younger than I am, I would not basically go crazy. And I see too many people these days, especially in the crypto market, going all in. Like they would do also in some of the stocks. I'm going all in. You can't go all in. Going all in, and especially having no strategy, the way that basically it's gonna play out. It comes back to basically being going to the casino and Blake, betting on the red or the black. This is not a strategy. Buy and hold has never been a strategy. DCA has never been also a strategy because DCA kind of accommodates, yes, in terms of basically math, it's great when the market basically goes up or goes down, but still it kind of basically gets back to buy and hold has never been in my game a strategy because buy and hold is kind of like buy and hope. You're buying and you're hoping that the market's going to keep on basically going up and up and up, and your equity is going to basically build up like with time. But the thing is, like we know, the market can be a bit psycho, especially in crypto or even stock market, and we have this risk-off situation like we've seen recently, since November in crypto and since the beginning of the year as well, since December, beginning of the year in the stock market. We have these areas, these time frames where the market is going to correct, and you have to basically make sure that this fits your personality, the way that you can digest these big drawdowns, those big market collapse, and the overall exposure that you have to these markets in the way that basically your portfolio is secured. So therefore, that's I've been extremely opportunistic in the way that the market has been acting, and the way that I determine my big areas of intervention. I would be very disciplined. I would be very patient. I will wait for this sort of like big spike down, like we had on beginning of December, or with like we had also in September. And I will be patient. I will basically work my fishnets bids way below the market. And once I get filled, I will be very opportunistic on that first bounce that we see 20, 30, or 70%, even like on some of the cryptos. I'm looking, usually at the core of 5 to 10 nice crypto project that I like. I will trade these ones. That's the one that I'll basically be more active in. But I will be very opportunistic. And I'm immediately in the fact when we get this bounce, when I basically buy these areas of strong support, in my views, that's the rationale of my trade. If it holds, if we bounce, I will take a third, or anywhere between like 20 to 30% of my position out. I will secure my position at break even, and I will wait to see if the market is going to prove me right, keep on going. And in that case, great. I will basically build again around the core of the position. If not, then that means that I will basically get stopped out at break even and try it again. But the rationale has to basically, the rationale has to hold. And if I'm buying an area of support and it doesn't basically does what it's supposed to do according to me, then I'm out. So you have to have in every single case an invalidation point at which you will be out. So this market, I've been extremely opportunistic, waiting for several areas of support buying into that. If it every time that it bounced, I would basically get out of a third of my position, or 25% or 20%, depending, how I feel at that point in time and how much momentum I see in that market, and then leaving the position at break even. So in all that move, even though it was not, I mean, I know that some people have been, and I see around me, even in my family, a lot of people having their buy and hold portfolios. All this, basically this period of time that we've seen since almost, the summer when we started again in that bull run till now, their portfolio hasn't done anything. It's, if anything, is basically either hasn't done anything or lost a little bit. In the meantime, I've been making money on my portfolio because I've been more opportunistic. I've been taking cash off the table regularly, again at my targets that I established before I even basically start the trade. I know where I'm going to get out. I know where I'm going to get. I'm going to get in. When I get in, I know what I'm going to get out, whether I make money or whether I lose money. But you have to have this trade management where you cash in on the way up and you cash out if you're wrong, and you have your invalidation point where the trade doesn't make any more rational. Now, going back to the market, again, looking at slightly bigger time frames. And again, I'm showing you the charts. This chart is on the log scale, so we can understand that what the market has been doing in the past. And right now, I've been rebuilding some position, some of these cryptos that I'm looking at, like the big project that I've been looking at recently, Atom, FTM, some of the DeFi's like Luna and AVAX. What else I've been looking at as well? The big project that I'm looking at usually. Mana and Sand in the metaverse area, which I think is also an interesting one. ADA recently have been also a bit more involved, although I didn't really trade that for a while, but there was a comeback in momentum, and that's why I like to trade. These are the sort of level, and in the big ones, I won't be looking at Bitcoins. I think Bitcoins, I'm using it as a benchmark, it helps me to establish these big areas of resistance and support, and try to gauge what the overall market is doing. But in terms of big crypto, I will trade the Ethereum definitely a lot more than Bitcoin. I almost basically don't trade Bitcoin anymore. Anyway, in terms of Bitcoin, I've started basically going and reestablishing some of my position, especially around that level that we hit yesterday, and that's why I felt I need to basically go back and edit a quick video on that. And I think it's a key area, key support area around the 2150, 2200 on the Ethereum. I think that we might see a little bounce. I've played that, and that, and along with some of the cryptos, and but again, that's this is my sort of like invalidation point. Below that, I think that there's a very good chance that we will retest the lows of the market around 1700. This area where we find ourselves during the whole summer, like from the correction that we had in April, May, and then we finally basically came out on the way up in at the end of July, and that was the beginning of the bull run again. If you look at I'll show you the overall total crypto market, just to realize as well where we are in schemes of things. Again, very very close to what I'm talking about. We're talking about 1.4, 1.5 trillion in market cap of the crypto market. But if we can't hold that level, I still believe that there will be a good chance that we'll retest these lows of 1.2. In my previous video, that if you get like 10 minutes to look at it very quickly, you'll see that was my area where I expected the market to be around the 1.7. That's why I felt that we would see the market going, and we would see a first bounce. We've seen that sort of bounce, and I've been playing also on this key support of the market. But again, bought that bounce, sold out on the first opportunistic bounce, and then got stopped out at break even. So now I'm rebuilding a little bit of my portfolio. I mean, like I said, I've been almost out on almost like 90%, 95% out on everything, and I'm starting rebuilding slowly. And what I mean rebuilding is like, if you have a number in mind, and I know that's it's not the case of every one of you out there. I mean, some of you are already investing, and some of you right now are, you know, not such a great position, especially if basically you started basically filling your portfolio towards the end of the year last year. So right now you're probably sitting on the position that's in the red, and you don't know exactly how to handle. Then that video is important for you to basically to start understanding that that's the sort of level that you have to see. That's this area, like I said, 1.43 and 1.16 trillion in market cap. And I'll go back to Ethereum, because probably is going to speak to you a lot better. So you said 2150, 2200, and the low that we've seen in the summer around 1700. This is the area that we need to hold. And that's the area that basically you need to start taking as an validation point for your portfolio to start reducing exposure. These, for me, who hasn't been basically almost I've been involved, but again, on an opportunistic basis, in and out, in and out. Now that's the area where I feel like in the summer of 2021, we're getting back to this area where this is interesting. This is the way that I start basically like to build my position again. But I don't think it's going to be like a big bounce. I don't a quick bounce. I think that basically we're going to be probably in that area and seeing quite a few weeks before we start seeing the market really reacting and maybe turning around. And again, when I say turning around, it is something that we're not sure about. We're playing probabilities. We're trading. We're basically trying. It's all a game of probabilities and statistics, and that's what we need to understand. So this area, like I said to you, this green box that I'm showing you on the Ethereum, for instance, that should be your benchmark, and then you should either trade the Ethereum on that basis, or basically start looking at other crypto projects that are the one that you feel the closest to, and start basically acting upon these levels. But there is only probabilities that we can play. My invalidation point will be the back of this area. Below that area, I will start basically becoming a lot more sketchy and really coming out of that asset class for a while, because I want to show you, and that's the last thing that I will show you, and I will end up this video on that note. If you look at this, let me just get rid of that so I can show you. I'll make it a bit clearer. I'll get rid of the Fibos, but many times in the past, and I know that this is a young asset class, it's still basically very very young in the scheme of things, very young in the scheme of also overall market capitalization, or daily volume, compared to lots of big asset class like commodities, FX, and stocks. But in the past, we've seen these markets correcting and entering these big bear trends, losing 94% back in 2018, losing almost 67% on that move. In 2019, losing 70% again back in 2020. Okay, and even like this year, I mean, well, not this year. Sorry, let me just get rid of that. Almost 60% in the move that we've seen in this last summer, and so far that's what we've seen as well. So again, don't think that everything has to go up because it has to go up. Yeah, things go up. You have the rationale for the trade. You have to come in, establish your risk, like I said at the beginning of this video, and be paying attention for that. But if it goes against the rationale of the trade, you got to be out, because in the past we've seen that it can react a bad way. That's it. I'm going to end this video quickly, and good luck to you.